A lot of people in America hear the term credit score all the time, but very few actually understand what it really means and why it controls so much of your financial life. If you are just starting out or if you are made mistakes in the past, this video is going to be very important for you. Your credit score is basically a number that tells banks and lenders how trustworthy you are with money. It answers one simple question: if we lend this person money, will they pay use back on time? In the United States, credit score usually range from 300 to 850. The higher your score, the better your financial reputation. If your score is high, you get lower interest rates, easier loan approvals, and more financial freedom. If your score is low, everything becomes expensive: loans, credit card, even renting in apartment. Now let's understand what actually builds your credit score. The biggest factor is payment history. This means, do you pay your bills on time every single month? Late payment hurt your score badly. Missed payment hurt every more. Even one late credit card payment can stay on your credit report for years. So rule number one is very simple: always pay on time, no excuse. The second big factor is how much of your credit you are using. For example, if your credit card limit is $1,000 and you are using $900 every month, that look risky to lenders. Even if you pay it off later, it still hurts your score. A good rule is to use less than 30% of your total credit limit. Lower uses show discipline and control. The third factor is length of your credit history. This simply means how long you have been using credit. Older account help your score because they show long-term behavior. That's why closing old credit card is often a bad idea. Even if you don't use them much, the fourth factor is a new credit. Every time you apply for a loan or credit cards, hard inquiry is made on your report. Too many applications in a short time make you look desperate for money. So avoid applying for multiple credit card or loan at the same time. The last factor is credit mix. This means having different type of credit like credit card, car loans, or students loans. You don't need all of them, but a healthy mix help over time. Now let's talk about mistakes that destroy credit scores. The biggest mistake is ignoring bills. Many people think small missed payments don't matter, but they absolutely do. Another mistake is making out credit card high balance signal financial stress. Even if you pay minimums, closing old card, co-signing loans are unreliable people, and applying for credit too often are also common mistakes. Now here is the good news: no matter how bad your credit score is, it can always be improved. Start by paying every bill on time. Set automatic payment if needed. Lower your credit card balance slowly and consistently. Don't rush. Consistency matter more than speed. Avoid unnecessary credit applications. Let your credit breathe. Check your credit report regularly. Errors are common and fixing them can boost your score. Credit is not about being rich, it's about being responsible. A good credit score gives you options, freedoms, and peace of mind. If you master credit early, money becomes easier for the rest of your life. If this video helps you understand credit score better, make sure you like the button and subscribe for more simple finance education. In the next video, I will show how you to use credit card the smart way without falling into debt.